Hello. Okay, in the previous class, we have discussed some of the journal entries. So, what are the journal entries we have discussed? Only data, sir. Okay. So, we have completely discussed about the data situation. So, data is an asset or liability. Data is an asset. Only in the case of credit sales, okay, na, data value increases. In remaining all the situations, data value will be decreases. So, what are all the situations? Sales returns, data value decreases. Next, amount received from debtors. Again, debtor value will be decreases, and the discount allowed also debtor value will be decreases. There is another concept called as bad debts. So because of bad debts also debtor value will be decreases. Okay na. So there is another concept called as what ma bills accepted. Okay na. The debtor has accepted the bills. We have drawn the bill. So bills receivable accepted by the debtor. In that situation also debtor value will be decreases. So in the case of bill dishonor, debtor value will be increases. Okay, now in remaining all the situations, debtor value will be decreases. So now we are going to discuss from creditor point of view. So I think I have given the homework. Have you done? Is really? Okay. Shall I skip that concept? Creditor concept. Can I go forward? Okay, na? Can I skip that concept? Huh? Okay, na? Okay. Now write the what is the transaction number? Sixth one, na? One, na? Sixth one, complete discussion about the creditor. So I am taking an example. Imagine this is a business. And you know this person, right? Who is this person? Pushpa. Pushpa is our creditor. Pushpa is our creditor. So creditor means we are going to purchase or we are going to sell amma. Purchase. So business. He is our creditor. So we are purchasing. So goods purchased on credit of rupees 10 lakhs. What is the value of goods we have purchased? 10 lakhs. So in this situation, the creditor value increases or decreases? Increases. So why it is increases? Now only liability was created. Liability we are going to repay now. Liability was created. So in this situation, creditor value will be increases. After that, what we will do ma? We are going to give the purchase returns or sales returns. Purchase returns is also called as where is a return outward. Purchase returns is also called as return outward. Return outward. Okay, now in this situation of rupees, let us take it as 2 lakhs. So in this situation also, creditor value will be increases or decreases? Decreases. So now how much amount we need to repay? Only 8 lakhs. At the initial says how much amount we need to repay to the creditor? 10 lakhs. So next, what will be happen? We are going to repay amount paid to creditor. Cash paid to creditor of rupees 7 lakh 50,000. In this situation, creditor value increases or decreases? Decreases. What is the next concept? Discount allowed or discount received? So we are going to receive the discount. So in this situation also, so we are going to receive the discount. So in the discount received, of rupees how much amount? What is the balance amount? 50,000. So in this situation, again the creditor value will be decreases. So this is the overall concept. So we are going to see one by one. Are you getting the point? Same like debtor, we are discussing the creditor. Okay, what is the first one? Credit purchases of goods of rupees 10 lakhs. What are the two outcomes? The two outcomes are purchase and creditor. Purchase and creditor. So what is the meaning of purchase? Expenses or income? So expenses will have which balance? Debit balance. So always expenses are increases. As of now, expenses are increases. So what we need to do? Debit. We need to do the debit. Next one, creditor liability. Which balance? Credit balance. So liability created or liability repaying? Created. So in this situation, increases or decreases? Increases. What we need to do? Credit. So what is the journal entry? Purchase account debited to creditor account. Purchase account debited to creditor account. So what are the columns? Date, particulars, LF, debit amount and credit amount. So purchases account debited to creditor account. So what is the amount? 10 lakhs and 10 lakhs. So what is the narration we need to write? Being goods purchased on credit. Okay, now I think did you write? Yes, sir, already. So next one. What is the next transaction? Purchase returns. Goods returned to creditor of rupees how much sum? 2 lakhs. What are the two outcomes? So purchase returns and creditor. So here the purchases we have considered it as what expenses. Then purchase returns we are considering it as income, opposite. Now income which balance credit balance. So here always income is increases. So what we need to do? Credit. Next then after creditor means asset or liability liability. Liability will have which balance? Credit balance. So here previously we are having how much amount of liability? 10 lakhs. Now liability will be reduces, sir, or liability will be increases, sir. Because of this transaction, liability will be reduces, so decreases. What we need to do? We need to do debit. So what is the entry we need to write? Creditor account debited to purchase returns account. Okay, na? So what is the format? Date, particulars, LF, debit amount and credit amount. So what is the entry? Creditor account debited to purchase returns account. What is the value? 2 lakhs and 2 lakhs. What is the narration we need to write? Being goods returned to creditor. Okay, now. So are you following? So complete. We have how many completed? Ma, we have 2 completed. What is the next transaction? So cash paid to creditor of rupees how much more? 7,50,000. So what are the two outcomes? Cash and creditor. Cash and creditor. Okay, now guys. So what is the entry here? So here cash is equal to asset. So cash comes in, the goes out, amma. Goes out. Okay, now we are repaying, we are receiving, we are repaying. So here the asset is having which balance? Debit balance. So cash goes out, so that means decreases. So what we need to do? Debit or credit? Credit. So creditor liability. Which balance? Credit balance. Sir, we are repaying the liability. We are creating the liability. Repaying. Repaying means increases or decreases, sir? So decreases. What we need to do? Debit. So what is the journal entry? Creditor account debited to cash account. So as of now we have taken a cash. Normally what we need to write? Bank account. More than 10,000 means we need to write the bank. Okay. So what is the entry? Creditor account debited to cash account. How much? 7,50,000 or 7,50,000. What is the narration we need to write? Being cash paid to creditor. Okay, guys, up to here. Next one. Discount received from creditor. Discount received of rupees how much? Of rupees 50,000. Sir, here discount receiving means we are receiving the cash. No, we are not receiving the cash, but the credit we are not going to repay to creditor. That means our in our books of accounts the creditor value should be 0 na 50,000. 0. We should make it as 0. What are the two outcomes here? Creditor and discount received. Cash and discount received we should not use. So creditor the discount received. So discount received is a cash discount or trade discount? Cash discount. Discount received is a cash discount. We are going to record in the books of accounts. Why we need to record? Because in order to identify the correct profit or loss, we need to record the discount received and discount allowed. We should not record the trade discount. Why? Before the transaction recording into the business itself, we know that is a discount. So for that reason, we are directly reducing the amount of discount and directly we are recording in the books of account. The trade discount will be appeared in the invoice. That will be appeared in the invoice. Even though it is appeared in the invoice, we should not show na. We should show na. We should not. It is not required to show. Okay na. So creditor means liability. We have which balance amma? Credit balance. Again, the creditor value increasing or decreasing? Decreases. So what we need to do? Decreases means we need to do debit. Yes or no ma? Okay na. Only in the case of purchases, credit purchase, the creditor value increases. Remaining all the cases, the creditor value will be decreases. So discount received means nothing but gain. We can call it as what ma? Come gain or come. Which balance? Credit balance. In our class, one person will be there. If it is debit means he will say credit. If it is credit means he will say debit. Instead of debtor, he will use creditor. Instead of creditor, he will use debtor. Even though he tried to manage to get 253 in CMA Foundation. Okay. Credit balance increases or decreases? Amma? Increases. So what we need to do? Credit. So what is the journal entry? Creditor account debited to discount received account. Now only I have told you na that person. In Telugu, one proverb will be there. After listening Ramayanam, they will ask one question. Who is Sita? So what is the entry? Creditor account debited to discount received account. And even though that is a wrong thing, but he will say with a confidence that is a great thing. So what is the amount? 50,000 and 50,000. So what is the narration? Being discount received or allowed? Received. Okay. Being discount received from debtor, from creditor. Okay, these are the transactions we can see from whose point of view? Creditor. Okay, now we can write the component here. Yes, we can write the component for B, C and D. What is the component we can write? Creditor account debited to purchase returns to cash account and to discount received account. We can write like that. Okay na? So next we are going to discuss what ma? Creditor account. We have the previous class we have discussed about the debtor account. Now we are going to learn about the creditor account. Okay na? So now easily we can write. So creditor account. Okay, they are asking what is that person name? What is your name? Okay. Huh? Okay. These are the live sections. I think so. The parents will see. Okay. After this is a 7th class or 8th class. I think so. After 2 classes, we are going to reveal that person name. Okay na? We wait. Okay na? Please please subscribe the Shikara class. Shikara tutorials for more updates regarding to CMA Inter. I will show you one day that person. First we need to write the opening balances and closing balances. So creditor means liability asset. Liability asset. Liability. Okay. Creditor is a liability. We are going to have which balance? Credit balance. Sir, credit balance means opening balance will be on which side? Credit side. So we need to write 2 balance brought down by By balance brought down. Okay, now we are not going to write any amounts, just we are preparing the account. Closing balance. To balance carried on. Closing means carried on. Beginning means brought down. You already seen in the initial classes itself. And next, then after. What is the first entry, Amma? Purchase account debited to creditor account. Yes or no? So we are creating the purchase, we are creating the creditor. So in that particular journal entry, if you observe, what is the journal entry, Amma? Purchases account debited to creditor account. So here the creditor is debited or credited? Credited. So that for that reason, we are preparing the creditor account, we are preparing the purchase account. We are preparing the creditor account. So in the creditor account, we need to record on which side? Credit side, because it is credited in this journal entry. But we are recording in the credit side with the name of opposite asset. What is the opposite asset? Purchases. So what we are going to write, ma? While recording anything in the debit side, we are going to start with the 2. While recording anything on a credit side, we are going to put the by. So what we need to write now? By purchases. Purchases or purchase returns? Purchases account. Next, what is the entry? Creditor account debited to purchase returns account. Okay, na. So creditor account, we are preparing a purchase returns account. Creditor account. So creditor debited or credited? Debited. So in the creditor account, which side we need to record? Debit side with the name of purchase returns. So what is the entry? So sorry, what is the posting here? To purchase returns. To purchase returns account. Next one, we are paying the cash. What is the entry? Creditor account debited to cash account. So again, to cash or by cash, amma? To cash or bank account. Next one, discount allowed. To discount allowed or by discount allowed? To discount received. Next, we need to discuss about the bills payable concept. Just a second. So bad debts will be there or will not be there? Because credit, we are the group persons, always we will repay to the creditor. For that reason, bad debts will be there or will not be there? Will not be there. In the debtor situation, bad debts will be there or will not be there? Will be there. Why? Debtor is a bad person. Huh? Okay. Safe side. Oh yeah, that person only saying yes. Imagine now, we are going to discuss what ma bills payable. So again in the bills of exchange chapter, I will repeat. Okay, no problem. But we are discussing the total account. For that concept, I am discussing this thing also. Okay, we are having the creditor. Here we are having what ma? Business. Okay. Who is our creditor? Our creditor? Puspa. This thing you will say right only. So Pushpa, if you are not going to pay, what he will do? He will come with the tax and he will cut off our heads. Huh? Okay. Business is there. First, what we have done, ma? We have done the credit purchases. But Pushpa is not having trust on us. Having the trust or not having the trust? Not having the trust. Okay. For that reason, what he is saying, I am not having any trust on you. So that what he will do, ma? He will draw the bill. He will draw the bill means creditor will draw, na? We are drawing. Creditor will draw. Now, what we are doing? We are going to do the acceptance. For that reason, from our point of view, that bill is called as bills payable. So, bills payable. So, don't think from point of view of creditor. Always we need to think from point of view of business, because owner is a different person, business. From the business entity concept, we need to discuss always from the viewpoint of view of business. In the previous example also, we have discussed from the viewpoint of view of business. So don't think from point of view of creditor. Here at the time of credit purchases, what is the entry we have recorded? At the time of credit purchase, what is the entry? Purchases account debited to creditor account. Now bill we have accepted or we have not accepted, amma? Bill accepted, bills payable come into the picture. Yes or no? No. This entry we need to keep it in our books. We need to change this particular entry. We need to change. Okay na? In order to change this particular entry, what is the entry, amma? Purchase account debited to creditor account. What we need to do, sir? Purchases we can reduce, we should not reduce. Purchases we should not change. We should not change the purchases. Okay na? So then which thing we can do the reduce? Creditor. So creditor balance will be decreases. In the place of creditor, who will come into the picture? Bills payable. So creditor value will be decreases and bills payable value will be increases. Bills payable is a asset or liability? Liability. Creditor is also a liability. Okay na? So both are liabilities, but creditor value decreasing. So that what we need to do? Debit. Bills payable value increasing. So that what we need to do? Credit. What is the entry? Creditor account debited to bills payable account. This creditor name will be changes as drawer. Will be changes as what, ma? Drawer. Okay na? At that point of time we can discuss in a clear manner, no problem. So what is the entry? What is the situation, ma? Bills accepted of rupees how much? 10 lakhs. Bills accepted of rupees how much, amma? 10 lakhs. What are the two outcomes here? Bills payable. We are accepting na, so that bills receivable la payable la. Bills payable. And what is the second outcome, sir? Creditor. So bills payable, asset or liability, amma? Bills payable is a liability. Creditor is also liability. So we'll have which balance? Credit balance. So here bills payable comes in na, goes out. Comes in, we are receiving, we are accepting, and so we are accepting the bills means our liability increases or decreases. Our liability is increases. So what we need to do? We need to do credit. Next one. Liability is also which balance, amma? Credit balance. Here we are going to decrease or increase? Decrease. Why we are decreasing our liability? Because instead of creditor, who is replacing the creditor? Bills payable. Okay now. So what we need to do? Debit. So what is the journal entry we need to record? Creditor account debited to bills payable account. So what is the amount? 10 lakhs and 10 lakhs. So no need of amount anything, just I am writing. So now we are preparing which account? Debtor account or creditor account? Creditor account. So creditor is debited or credited? Debited. In the creditor account, which side we need to record? Debit side. What we need to record? Two bills payable. Super. To bills payable account. Next one. On the due date, we need to repay. Na? Creditor will repay to us. We need to repay. If you repay, what is happening, ma? So if you observe this both the entries, what is the first entry, amma? Purchase account debited to creditor account is the first journal entry. What is the second journal entry we have recorded? Creditor account debited to bills payable account. That means already one time the creditor we have debited or credited? Credited. Another time again the creditor value is debited. That means creditor value is there or not there? The creditor account zero balance will be there. How, sir? Simple. So imagine this is which account, amma? creditor account. Already in the debit side, how much amount we have recorded? Debit 10 lakhs. And again the credit side, how much amount we have recorded? 10 lakhs. What is the account balance? 0. This is a debit balance, no. This is a credit balance, no. Both the sides are equal means this is called as nil balance. That means in this particular account is complete closed, is still open, closed in our books of accounts. So now what are the accounts we are going to have? We are going to have only purchases account. And what is another account we are going to have? Bills payable account. So now we are paying means cash balance increases or decreases? Decreases. Cash is an asset or liability? Asset. Cash asset, debit balance decreases credit. In the debit side, what we need to do? If we are paying means which value is going to reduce? Bills payable value will be going to reduce. We should not write again what creditor. We should not write again what? Creditor. Already the creditor value is there in our books of accounts or not there? There is no creditor value in our books of accounts. Already 10 lakhs here and 10 lakhs here. So for that reason we already closed the creditor account. What are the still accounts we are having? Only 2 accounts, purchase account and bills payable account. Okay, now we should not disturb the purchase account because it is an expenditure, we should not disturb. So which account we need to reduce now? Bills payable. So what is the entry, amma? Bills payable account debited to cash account. Okay, now is this particular entry is affecting creditor account or not affecting creditor? Not affecting the creditor account. Are you getting the point? We are repaying means cash goes out. Cash goes out means debit or creditor? Credit. Which value will be decreases? Bills payable value will be decreases. So what is the entry we'll get, ma? The case of honor or dishonor, amma? Honor. In the case of honor, what is the entry? Bills payable account debited to cash or a bank account. Okay, na? So whether this entry is affecting or not affecting? Not affecting the creditor account. Okay, na? Is there any doubts? Okay, na, Maniku? Next, dishonor. What is the meaning of dishonor? We have repaid, we have repaid on the due date, we have not repaid. We have not repaid. Even though we have not repaid, the bill value will be existing or will not be existing. So bill should be cancelled. Bill should be cancelled. At the time of acceptance of bill, what is the entry we have recorded? Creditor account debited to bills payable. This is called as acceptance entry. Yes or no, ma? Now we are going to cancel the bill. We are going to still present the bill. Cancel the bill because due date completed or not completed? Completed. For cancellation, what we need to do? We have recorded this entry. Just we are striking off. We should do like that. No, we should not do like that. Then what we need to do, ma? We need to pass the reverse entry. We need to pass what, ma? Reverse entry. Strike off means here reverse. Debit reverse means credit. Credit reverse means debit. What is the entry we are going to get? Bills payable account debited to which account, amma? Creditor account. Here in this situation, again the creditor value increases. Again the creditor value increases. Okay, na? So what is the posting? The creditor account. Which side we need to do the post? So creditor is debited or credited? Credited. In the creditor account, which side we need to record? Credit side. So with the account name of, what is the account name? By bills payable. This is a honor or dishonor, amma? Dishonor. So we should write the dishonor. This is called as acceptance. This is called as acceptance and this is called as dishonor. So in this way we are going to complete the which account? Creditor account. Okay, now this is the overall concept about the creditor. Now we know the another method also. What is the another method? Credit balance increases means which side? Credit side. Decreases means which side? Debit side. So we need to write firstly what, ma? DR and CR. So if you observe this scenario, because of purchases, which purchases, amma? Credit purchases, the creditor value increases. For that reason we are recording by purchases. Because of bills payable dishonor, again the creditor value will be increases. Because of that reason we are recording on the which side? Credit side. And all the debit items we have recorded, what is the reason, ma? creditor value is decreases. So creditor value increases means credit side, creditor value decreases means. So this is the overall concept. Up to here we have clearly discussed about the what are the things. First capital we have discussed. Okay na? We have discussed the capital account. We have not discussed the capital account. Yeah. Only statement we have discussed. Okay. Okay na? Completely we have discussed about the debtor and creditor. That means we know the credit purchases, we know the credit sales, cash sales. Okay na? Sales we will record in the case of goods. Asset name will be recorded in the case of asset purchase or asset sales. Okay. Next we are completely discuss about the capital. Next we are going to completely discuss about what ma capital. Now you know already what is the statement of capital. So once again I am trying to write. So you don't write anything. Just I will write. What is the complete discussion about capital? Just participate, that's all. This is our business. Pawan Kalyan is the owner. Atom right. These things you know very well, but you don't know debit and credit. Huh? Even though if you don't know, but he is a hero, that's all. Just as an example, okay, don't hurt. It is not hurting anyone. Okay, even though I am not a fan of Pawan Kalyan, or you can assume that one. Okay. So here the matter is not about the Pawan Kalyan. Here the matter is about the capital. Okay na? So owner invested the capital. What will the owner do ma? He will make the investment. So invested to the business of rupees how much? 1 crore. How much amount we have invested? 1 crore. This is called as which ma? Opening capital. I am going to call it as what? Opening capital. So this opening capital we need to repay to the owner. So first of all, he is a owner. This is a business. We need to think only from the viewpoint of view of business. Only our target. We need to think each and every point. If you go to the company accounts, if you whatever you go in the company accounts, you will think from the point of view of company. In the partnership, you will think from the viewpoint of view of partnership. Okay na? Now we are discussing about the sole proprietor. Okay na? We are going to discuss from the viewpoint of view of business, not from the sole proprietor, from the viewpoint of view of business. So in this situation, we need to repay na, owner need to repay na. We need to repay to the owner. That means liability created, liability repaying, created. In future we will repay na, now only we are going to repay na. Future at the time of winding up we will repay. Okay na? Okay. On this amount. But we are utilizing the amount, we are not utilizing the amount. We are utilizing the amount. For utilization of this amount, owner will, we need to pay certain consideration to the owner. What is the name of that consideration, sir? Interest on capital. Interest on capital. So this is a capital. On this capital we are utilizing. For that reason we need to pay certain consideration to the owner. Okay now we will repay the capital only at the end of the completion of business, only at the winding up. Until then he need to wait. Okay now, for example, he is not giving anything to us. He is just putting 1 crore in the fixed deposit. He will get the interest and he will not going to get the interest. He will get the interest. Pawan Kalyan will get the interest and will not get amma. But instead of that reason, not putting into the fixed account, fixed deposit. He is giving to us for the sake of doing the business. For that reason, we need to pay the consideration. No need to pay the consideration. We need to pay the consideration. What is the meaning of that one? What is the name of that consideration? Interest on capital. So we need to pay interest on capital. Okay, Namma, we need to pay interest on capital. Okay, next then after. Are you getting the point? Interest on capital means expenses or income. It is an expenses because owner, instead of putting here, owner, if in say that 1 crore is putting into the bank account, means he will get the interest on that fixed deposit. But instead of now he is what he is doing, instead of putting into the bank account, he is giving to us. Then we need to pay the interest or no need to pay the interest? We need to pay the interest. Next then after, owner will take away the, what is the owner will do, So owner will make the drawings. What is the meaning of drawings? From the business, owner can take what goods or cash or any other asset. Any other asset for personal use or business use. For personal use. That situation, the concept is called as drawings. Here drawings, who need to repay? Owner need to repay to the business. That means we are in a receivable capacity. We need to receive from the owner. We need to receive from the owner. So imagine he has taken away the 10 lakh rupees. What is the amount of drawings? 10 lakhs. How much amount we need to repay initially? Initially, what is the investment? 1 crore. So 1 crore we need to repay. In that 1 crore, how much amount the owner taken away? 10 lakhs. So we can reduce or we should not reduce? We can reduce. Ultimately, how much amount we need to repay? 90 lakhs. If we repay means it is sufficient. Yes or no, ma? Instead of we are paying 1 crore and again we are going to take 10 lakhs. So what is the best thing? We are going to set off. We are going to set off that 10 lakhs and we need to pay ultimately how much? 90 lakhs to the owner. For that reason, drawings we need to reduce from the capital. We need to reduce from the capital. Okay, next. Then, without giving this 10 lakhs to the owner, we can put the 10 lakhs in the fixed deposit and we can get the interest. We cannot get the interest. We can get the interest. But in this situation, we are not going to get any interest. Then who need to pay the interest to us? Owner need to pay the interest on drawings. So for us, the interest on drawings is called as income. For us, the interest on drawings is called as income. So because of that, again the capital will be reduces, the capital will be increases, reduces. So because of additional capital, okay, now because of opening capital and because of interest on capital, the capital value will be increases. Then because of drawings and interest on drawings, the capital value will be decreases. And again for the net loss also, capital value will be decreases. So what are the things the capital will be increases, ma? Opening capital, capital will be increases. Interest on capital, capital will be increases. Additional capital, capital will be increases. Net profit, capital will be increases. Now, because of which reasons the capital will be decreases? Drawings, interest on drawings and net loss. Okay, na? So easily we can prepare the account. Okay, how we can prepare the account? Then after we can write the entries. Okay, na? Directly we are going to prepare the account. Okay, which account we are going to prepare, ma? Capital account. Okay, na? Capital is an liability asset, amma. Liability will have which balance? Credit balance. So for the credit balance, so credit balance means increases means which side? Credit side. Decreases means which side? Debit side. So because it is a credit balancer or debit balancer? Credit balance. If the credit balance increases, we need to record on which side? Credit side. If the credit balance decreases, we need to record on which side? Debit side. First we need to write the opening capital and closing capital. Nothing but opening balance and closing balance. So credit balance, opening balance will be on the credit side. What we need to write? By balance brought down. Okay, now I am not going to write anything. Next, closing balance will be on debit side. To balance brought down or carried down? Carried down. How much? Okay, we are not going to write. And next, opening capital was completed, closing capital was completed. And next, what we need to do? Additional capital. Because of additional capital, capital value increases or decreases? Increases. Capital value increases means which side we need to put? Credit side. So we can write what ma? To cash or sorry, by cash or bank account. Because of this one increases, so that we are recording on credit side. And next, interest on capital. Increases or decreases? So can I write credit side? Yes. So by interest on capital. Next one. By net profit. Super. Okay, now he is come to the sink. To net profit or by net profit, amma? By net profit. Next one. After that, because of which reasons the capital will be decreases? Drawings. Two drawings. Account. Increases or decreases? Decreases. Next, two. Interest on drawings. Next one. Two net loss. This is where we need to prepare what ma? Capital account. If it is increases means which side? Credit side. If it is decreases means which side? Debit side. So because of which reasons the capital balance will be increases? Opening capital, additional capital, interest on capital, net profit. Because of which reasons the capital will be decreases? So drawings, interest on drawings, net loss. So what is the entry for additional capital? What is the entry for the additional capital? Sir, cash and bank is debited or credited? Credited in the capital account. That means capital should be in the journal entry. Which side? Credit side. Which side, amma? Credit side. In the capital account, cash and bank debited or credited? Credited. So that the capital in the journal entry will be on which side? Credits. Credit side. Which side, amma? Credit side. What is the entry? Cash or bank account debited to capital account. Cash or bank account debited to capital account. What is the interest on capital account entry? Interest on capital account debited to capital account. What is the entry for the net profit? Net profit account debited to capital account. Net profit transferred to capital. And next, what is the drawings entry? Capital account debited to drawings account. What is the interest on drawings account? Capital account debited to interest on drawings account. What is the net loss transferred to capital? Net loss account. So this is so we need to prepare the capital. So in the single entry chapter, this is the most important point. So based on this, totally we are going to solve 4 to 5 questions. How many questions we will solve? For this is the one of the model in the single entry chapter. Totally 2 types of problems they will give. So this is the one of the type. Okay, now on this totally how many questions we need to solve? 4 questions. If you know this one, easily we can complete the single entry. If you know this all the accounts, what are all the accounts? Debtor account, creditor account, and capital account. Okay, now we are not going to learn the basics. We are learning. I am preparing for you the future topics. Okay, now if you know these accounts, easily you can prepare the NPO, non-profit organization. Easily you can solve easily the non-profit organizations. Okay now. So please listen this. So keep in your mind, we are not only discussing the basics, we are discussing the whatever the matter requirement for the future chapters. Okay now. We are going to learn the subsidiary books for the in order to in order to solve the rectification of errors. If you know the subsidiary books, then only we can solve the rectification of errors. Otherwise, we cannot solve the rectification of errors. Are you getting the point? So please take a note of it. This one is not needed. అయిపోయిందా రాసుకుంటావు కంప్లీటెడ్. What happened? Next, our target is to learn about the income account, expenses account, income account and expenses. Before that, I need to discuss about the outstanding expenses, prepaid expenses, and next one income receivable, income received in advance. We can discuss those topics. Then after we can discuss the income account and expenses account. Is there still we are having 40 minutes left? Up to 4 only now. Completed? Vaibhav Survamsiya. Udbhav, yes, name is Udbhav. Okay, he is such a nice person. Because of him, our class will be very much entertainment. Udbhav, where are you from? SR Nagara? Hyderabad. Some one girl is asking, where is the address? What is the address of Udbhav? Do you want that girl name? If you want, I will. Okay. What is our next target? We need to learn about outstanding salaries. So next heading is called as what ma? Outstanding salaries. What is the meaning of outstanding salary? Sorry, outstanding expenses. Outstanding expenses means standing outside the class. Outstanding expenses means payable. Expenses related to current year, but we have paid or we have not paid. We have not paid in the current year. So it is a liability, it is an asset. Liability. So what is the meaning of outstanding expenses? You can write along with me. Okay now. While writing, you can participate, no problem. Why Udbhav will sit in one chair, his book will be another chair. Okay, somebody is asking, can you show the Udbhav face? Okay, what is the outstanding expenses? Expenses related to current year. What is the meaning of current year? Okay, years are two types, financial year and calendar year. Okay, I am not asking those topics. What is the meaning of current year? Current year means present year. Ongoing year is called as current year. Okay. Expenses related to current year, but but we have not paid during the current year. But we have not paid during the current year. So that means these are asset liability, amma. It is a liability. Liability created or liability repaid. Liability just now the liability created or we are going to repay na. Liability created. That means liability increases or decreases? Decreases. Okay na? I will take an example and I will say the entry for the outstanding expenses. So till now did you understand the concept? What is the meaning of outstanding expenses? Expenses related to current year, but we have not paid during the current year. Okay now. Okay. What is the meaning of this one, sir? Okay. Udbhav, who is your favorite cricketer? Huh? Yeah, if you say I will put okay now. What is the meaning of this one? Indiana. BCCI. BCCI. Okay now. What is the meaning of BCCI? Board of okay. Board of Control for Cricket in India. Board of Control for Cricket in India. Okay. Why you are taking this one, sir? There is a reason. Say, who is your favorite cricketer in India? Who is your favorite cricketer, man? I think you don't know the names of cricketers, huh? Oh. Okay. Somebody is saying Kohli. I will take the Kohli. Aggressive man. Okay. For Kohli, who will pay the salaries? BCCI. Okay, na? I will shift this one. Why are you laughing, man? Oh, Udbhav is don't know about the cricketers. I think he will read the books in free time. Yes or no, man? What are your hobbies? Scrolling reels, sending reels. Free Fire. Okay. So now we need to think from views point of view, BCCI point of view. Okay, na? He is an employee. Yes or no, ma? He is an employee in the BCCI. Now we need to pay the salaries. So we need to pay the salaries. Imagine per annum. Per annum, how much we can pay to the Kohli per month. Okay, I'm not disappointing anyone. I am taking 1 crore per month, not per annum. Per month, how much? 1 crore. How many months will be there? 12 months. What is the total amount? 22. Oh, 1 into 12, 22. Okay, thank you, Urbo. You part of our class. What is the per annum total? 12 crores. 12 crores is the salary amount we need to pay to the Kohli. But in this 12 crores means how many zeros? 6. Okay, why this thing? We can write 12 here. Okay, na? This is nice. In these 12 crores, I am dividing into how many parts, ma? 2 parts. 8 CR. What is the balance amount? 4 CR. That means 8 CR we have paid in the current year. 8 CR we have paid in the current. This is called as salary. Paid or payable? Paid. 8 crores we have paid. 4 crores we have not paid in the current year. What is this name? Salary payable. Or we can write it as what, ma? Outstanding salary. So salary payable or outstanding salary. Okay, na? What is the entry for salary paid? To cash. Okay. Salary or salaries account debited to cash or bank account. You know this thing. But what is our target? You need to learn about the outstanding salaries. So here, what is the amount of outstanding salaries, sir? 4 crores. Okay. What are the two outcomes? Cash. Outstanding salary means we have paid or we have not paid. We are not paid. Okay now. But expenditure related to current year, not related to current year. Related to current year, but we have not paid. So even though if you are not paid, we need to show the expenses. So for that reason, salary is one of the outcome. We have paid or we have not paid? We have not paid. We have not paid to whom? Kohli. You have not paid to him, Kohli. Sir, if you are not going to pay amount to the Kohli means we are not able to pay the another players also. Did you get the point? If you take the Shikara as an example, okay, now Shikara management is not paid salary to me means is not paying salary to Bhaskar sir also. Why, sir? Without paying to me, paying to Bhaskar sir means I will accept, I will reject. Reject. Okay, you are paying salaries to Bhaskar sir, and then the management is not paying salaries to me means what I will ask, ma? So don't pay salary to that Bhaskar sir also. Why? Because if you are not having sufficient fund means what we need to do? Proportionate basis we need to do. Okay, na? For him 12 lakhs or 15 lakhs means proportionately, and we are also need to work now. We are also need to eat, don't eat. So for that reason, paying salaries, not paying salary to one employee means not paying salaries to every employees. Okay, na? For that group of people, instead of group of people, we are using one word called as what, ma? Outstanding salaries. Okay, na? So outstanding salary is called as liability. Normally it is a personal account, a real account, a nominal account. Personal account. Representative personal account. Normally here what we need to write? Employees. What we need to write, ma? Here employees. So without writing the employees, what we are doing, ma? What is the new name we are adding? Outstanding salary. So here instead of employees, we are using the outstanding salaries account. So representative personal account. So outstanding salary is represented by whom? Represented by the employees. Okay, na? Instead of owner, we are using the capital. Instead of owner, we are using the drawings. Those capital and drawings is also called as representative personal accounts. Okay, but we are not following the traditional approach. We are following only the modern approach. So salary means expenses. We are going to have which balance? Debit balance. Okay, increases or decreases? Increases. Expenses always increases. What we need to do? Debit. Did you get the point? Outstanding salary, liability. Will have which balance? Credit balance. Credit balance. So increases or decreases? Increases. Now only liability was created. Now only the liability was created. So increases. What we need to do? credit. So what is the entry here? Salary account debited to outstanding salary account. Okay now normally replace here the salaries with expenses. Okay now instead of salary put the word called as what ma? Expenses. What is the entry? Expenses account debited to outstanding expenses account. What is the entry for expenses paid? Expenses account debited to cash or bank account. What is the entry for outstanding expenses? Expenses account debited to outstanding expenses account. Now, which approach is the best one? Modern approach is the best one, not traditional approach. Modern approach, because sorry, in the modern approach, easily we can identify whether it is an asset, liability, income, expenses. Expenses means debit balance. Asset means debit balance. And next, liabilities are credit balance, incomes are credit balance. Easily we can identify when, in which situation it is increases, in which situation it is decreases. So for that reason, modern approach is the simplest approach. Easily we can write the general entries. So what is the entry for outstanding expenses? Expenses account debited to expenses account debited to outstanding expenses account. This entry we need to pass in the current year, next year, current year. In the next year, okay na, 1 second. In the next year, we are paying the outstanding expenses. The next year, we are paying what ma? Outstanding expenses. At that point of time, what is the entry? Outstanding expenses will be decreases. Outstanding expenses will be decreases. Outstanding expenses, liability, credit balance decreases. We need to do debit. Cash comes in, goes out, goes out. So what is the entry? Outstanding expenses account debited to cash account. That entry we need to pass in which year? Next year. Okay now what is the entry for the outstanding expenses? Expenses account debited to outstanding expenses account. Okay now in the previous class we have discussed one concept, cash basis and accrual basis. Okay, if you are following the cash basis means this entry you are going to record or you are not going to record. We are not going to record. This entry we need to record only in the case of accrual basis. So this is the ultimate objective. Okay, you can write. Completed this one. This one? No need. Oh. Leader. Okay, what is the next one? Prepaid expenses. What is the meaning of prepaid expenses? Prepaid expenses means next year expenses we have paid in the current year. Next year expenses we have paid in the current year. So how we can write ma here? Expenses relating to next current year. Expenses related to next year. We can write just next year. Expenses related to next year, comma, we have paid in the current year. Expenses related to next year, but we have paid in the current year. So what is the, whether it is called as asset, whether it is called as liability? It is called as asset. No? Instead of we are having the surplus funds, so for that reason we are going to pay. Okay, Nama. So generally there is a situation called as, so we don't know whether we are paying the current year or next year. So we always try to record what ma expenses account debited to cash, expenses account debited to cash. So like that at the end of the year, instead of paying 12 times, unfortunately we have paid 14 times. We don't know at the time of paying the prepaid expenses, but now we are discussing what ma prepaid expenses we have paid in the current year, even though it is not related to current year. Okay, that means it is belongs to next year or current year? Next year. Okay, so the same example I am taking. What is the total amount we need to pay? 12 crores. Or can I take another one? If you take the rent, rent paid in advance, we need to pay the rent in advance. Otherwise, owner will not going to accept. Owner will not going to give the house for the rent. So actual rent per annum is equal to 10 lakhs, sorry, 12 lakhs. Rent per annum is equal to how much? 12 lakhs. But in the current year, we have paid 14 lakhs. We have paid 14 lakh rupees. In this 14 lakh, I am dividing into the two parts. How we can divide ma? 8 lakh, 6 lakhs. Why 8 lakh, 6 lakh? 12 lakh, 2 lakh. Ante kada? 12 lakhs and 2 lakhs. What is the normal current year expenses? 12 lakhs. But 2 lakh is belongs to which year? Next year. So this is a current year. This is the next year. Okay, now what is the entry for 12 lakhs? Rent account debited to cash account. What is the entry for the 12 lakhs? Rent account debited to cash account. What is the entry for this 2 lakhs, sir? This 2 lakh also we have paid or we have not paid? We have paid. That means must and should we need to write to cash? Yes or no? To cash. In the debit side, what we need to write? Prepaid rent. What we need to write? Prepaid. If you write the rent instead of prepaid rent, rent means current year. Okay, now you are going to write here also rent. That one belongs to current year. So, but we should not include in the current year. We should include. We should not include in the current year rent. For that reason, we need to differentiate. We need to differentiate. So, what we need to write, ma? Prepaid rent or renter? Prepaid rent. If you write the rent, it belongs to current year. But it is belongs to current year or not belongs to current year? Not belongs to the current year. In order to differentiate rent and prepaid rent, in order to differentiate the current year rent and next year rent, what we need to write, ma? Rent and prepaid rent. Rent and prepaid. So why you have debited, sir? Prepaid rent is an asset. Prepaid rent is an asset. Which balance? Debit balance. So increases or decreases? Increases. Now only we have paid. It is an asset to us. In the next year, our asset will be increases or decreases? Decreases. In the current year, our asset will be increases. Okay, now prepaid expenses means it is an asset. In the next year, what is per month, ma? 1 lakh. Per month is how much? 1 lakh. In the next year, even though if you are not going to pay the 2 lakh, 2 months also, owner will accept or will not accept? Owner will accept, because how many months advance we have paid? 2 months advance we have paid. That means it is an asset, it is a liability. It is an asset. Okay, at the time of leaving the house, he will give, he will not going to give. He will give it back. So for that reason, it is an asset or liability? Asset. So we need to differentiate current year and next year rent. We know we should not differentiate. We need to differentiate. So for that reason, what is the entry we need to write? Prepaid rent account or rent account? Prepaid rent account debited to cash account. What is the entry for the current year rent? Rent account debited to cash account. Are you getting the point? So this is the actual discussion. Okay, now again in the final accounts I will repeat it, no problem. Okay, now what is the entry for the prepaid rent, amma? Prepaid expenses. What is the entry for the prepaid expenses? Prepaid expenses account debited to cash or bank account. In order to differentiate the current year expenses and next year expenses, we are putting the prepaid in before the expenses. Okay, now guys. So this is the overall conclusion. Okay, Nama. Is there any doubts? So in this class, we have completely discussed about the creditor account, and then we have discussed about the capital account. Capital, next outstanding salaries, prepaid outstanding expenses, prepaid expenses. In the next class, we will see the income receivable, income received in advance, and then we need to discuss which accounts? Income accounts and expenses account. So if both the accounts are completed, so what we can do, ma? So easily we can start with the capital and revenue chapter. Capital transactions, revenue transactions, and then subsidiary books, like that we can discuss. Okay, now guys. So easily we can do. Okay, I will show you one paper. Paper number 10 na. Okay, we can see the questions in the next class, no problem. Okay, is there any doubts to the today's discussion? Thank you, have a nice day. Thank you. Goodbye.